The Federal Reserve hikes interest rates with an eye on cooling rampant inflation. The economy added 315,000 jobs in August, with the unemployment rate rising to 3.7%, right in line with expectations, following remarks from Fed Chair Jerome Powell that he is willing to accept a weaker labor market in exchange for price stability. ABC News business reporter Alexis Christoforous with us now to break this down. So, Alexis, what does this report tell you about the state of the U.S. labor market and the state of the U.S. economy?
I'm going to call this report a Goldilocks report. Not too hot, not too cold, pretty much just right on a number of levels. Let's dig into this. You said 315,000 jobs added last month. That was slower than what we've been seeing the economy at over the past few months, but it still shows very solid gains there, good pace for employment. The unemployment rate ticking up to 3.7% from 3.5%. You might say, why is that good news? Well, it shows that people are now actively looking for work that weren't earlier. They're sort of coming off the sidelines now and looking for work, which is a positive thing. In terms of wages, they rose, but not by as much as expected, up 0.3% month over month. Year over year, though, wages up 5.2%. And I want to shine a light on something called the labor participation rate. And this is really important because this is a number the Fed really takes a look at. And it looks at the number of people actively in the workforce, or people who maybe are working part-time but want to be working full-time. That number rose to 62.4%. So that means we have more people now actively looking for work. And that's a good thing because we know how tight this labor market has been.
Indeed. So what does all this mean? The Fed, we know, meets September 20th and 21st. Right. What does today's data point mean for the Fed?
You have to think that this report was pretty much what they were looking for. I mean, again, it shows that the job market is continuing to be a tight labor market, but starting to slow ever so slightly. And we could maybe see the Federal Reserve achieve that soft landing we keep talking about, not pushing the economy into a recession, but bringing the economy down enough to lower prices and to bring inflation down from that 40-year high.
The Fed has to walk such a tightrope on that. Government data showing yesterday, right, jobless claims down for a third straight week. So this fleshes out the picture a little bit. We get this data weekly,
right? But
when we start to talk about 4-week averages, it does add up to mean something.
Absolutely. And what it's telling us is that, again, yes, we do have a tight labor market, but companies are holding on to their workers. They don't want to let them go. We got another report this week showing 11.2 million job openings for every person, for the 5.7 million people out there looking. So again, roughly 2 job openings for every person out there who's looking. And now, you know, this report actually raising questions. How aggressive will the Fed get later this month? Some are saying now maybe they don't need to raise rates by 0.75 percentage point, which would be the third straight monthly meeting that they did that for. So we'll have to see how aggressive they get following what I'm calling a Goldilocks report like today.
I like it. Perfect. Right down the middle. Alexis, thank you. Alexis Christoforous with us there.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.